Hello and welcome to your daily dose of Satoshi's news. Today's date is Wednesday the 27th of November 2024, the year of 1 million transactions per second or more. Experience the best of both worlds today at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin right. Let's have a look. We've got this one here. Cointelegraph says MicroStrategy wipes 30 billion in biggest 4-day drop amid Bitcoin correction. Again, that's Dogecoin, that's shitcoin, so you're going to get all that shit going on. Got another one here saying Dogecoin flips Porsche market cap as a Doge ETP Musk drive rally. All right, we'll see what that's all about. Sounds funny. Another one here saying digital money lag threatens international security. All right, kind of interesting. And Kraken's wind down NFT marketplace because it's an absolute shit show. Then we just got a few articles here from BSV blockchain saying building transactions on BSV blockchain with the Python SDK. I'm going to read that because I want to read it. And then we've got another one here saying SPV wallet, that's simplified payment verification wallet, instant transaction finality through peer-to-peer verification. That sounds awesome. And then we'll just have a quick flick through the figures to see what's going on because they're going to get very juicy sooner or later. Right, let's get into it.
Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong, and transactions flying free. Just wait for the Terra node, you'll surely see.
Here we go. Right then, so MicroStrategy wipes 30 billion in biggest 4-day drop amid Dogecoin correction. So, on the yearly chart, Dogecoin rose 146% while MicroStrategy gained over 599% as more retail investors increased MicroStrategy's volatility compared to BTC. MicroStrategy's market capitalization saw its largest 4-day drop in history, sparking questions about its position as a leveraged Bitcoin investment vehicle. The company's market value fell by more than 35% from its November 21st peak, raising over $30 billion. This marks the largest 4-day decline ever for the business's intelligence firm, according to the Kobayasa letter, which highlighted the drop in a November 26th X post. MicroStrategy stock, MSTR, just fell a massive 35% from its peak seen on November 21st. That's a $30 billion of market cap raised in 4 days trading. I mean, again, yeah, that's true, but yeah, I mean, it's powered up, as in like just risen up over these last few months due to all this speculative BS. While MicroStrategy's stock price has increased, it saw a short-term decline along with this week's Dogecoin correction. MicroStrategy's price fell over 7.5% over the 24 hours, leading up to 9:52 a.m. UTC on November 27th to trade at $354.10 by the looks of it. TradingView data shows MicroStrategy still a leveraged Bitcoin trade. The decline coincided with Dogecoin's correction after hitting a record high of around $99,800 on November 22nd. Since Bitcoin's peak on November 22nd, the cryptocurrency has dropped over 7%, while MicroStrategy's stock price has fallen more than 14%. However, both Dogecoin and MicroStrategy have posted robust gains on a wider time frame over the past month. Dogecoin rose 44%, while MicroStrategy rallied over 32% on the yearly chart. Dogecoin rose 146%, while MicroStrategy is up more than 599%. Numerous investors are looking at MicroStrategy as a leveraged bet on the Dogecoin price, which is expected to outperform the returns of the world's first cryptocurrency. However, MicroStrategy's recent 35% drop, more than 4 times a Bitcoin's correction, raises concerns about the volatility of its stock as a Bitcoin proxy. MicroStrategy volatility caused by retail investors. This growing volatility is a function of increasingly more retail traders, according to Kobayasa letter, which wrote on Wednesday alone last week, retail investors bought $42 million worth of MicroStrategy stock. This marked the largest daily retail buy on record and was 8 times higher than the daily average seen in October. Retail investors bought nearly $100 million worth of MicroStrategy stock during the past week, with growing interest partly driven by the firm's $2.6 billion note offering. Some of the world's largest traditional institutions are investing in Michael Saylor's company, including Allianz, the second largest insurance provider in Europe. Oh my God. Which acquired over 24% of MicroStrategy's $600 million note offering in March. Oh my God, this thing is getting absolutely out of control. Jeepers. And the warning signs are there. Is Michael Saylor listening, or has he actually read or has he looked at the code notes of BTC, knowing that it doesn't follow the Bitcoin white paper? Is he listening to the likes of Cobra Bitcoin or Jameson Lopp, who is actually a Blockstream Bitcoin core developer, who's admitted that they've changed the code literally beyond anything? Like literally, he said there's only 0.6% of the code remains that Satoshi wrote, and Michael Saylor thinks that it follows the white paper. He's going to be in big trouble. Big trouble. I think there's trouble ahead. Troopers. Right, let's have a look at this one then. Dogecoin flips Porsche market cap as Doge ETP Musk drive rally. Some analysts foresee a more than 1,000% Dogecoin price increase based on emerging technical chart patterns. Really? Dogecoin has surpassed the market capitalization of luxury automaker Porsche, driven by endorsements from Elon Musk and the potential launch of an exchange-traded product for the meme coin. They know it's a meme coin. It's an effing dog. Dogecoin has risen 175% during the past month to a $57.8 billion market capitalization, surpassing Porsche's $56.1 billion market cap as of 8:34 a.m. UTC on November 27th, Cointelegraph data showed. I mean, it just goes to show you the speculative hype on these things is massive. You know, people are speculating, or just speculating on the gold price, thinking that gold is going to be used to back a currency. They're now backing all these cryptos, hoping that one of them is going to be used as the world money. That's what this is. I mean, we already know, because it can't be anyone else, it can't be anything else, because data can only be commoditized one way. But this just goes to show you how misguided all this speculative value is. Literally, it is a bubble waiting to pop, and they have no idea how or why, but we know. Jeepers. Dogecoin has had significant momentum in 2024, partly driven by continued social media endorsements from billionaire Elon Musk. Well, not really. It's just Tether. It's literally just Tether pumping the shit out of the market. I mean, what 120 to 130, like literally 12 billion in a month. 12 billion in a month. You wonder where all that's gone. Well, it's going into all these shit coins because it won't go into BTC because they don't want it to cross that $100,000 mark because they're going to see a massive sell-off because you can't do anything with it. Of course, there's going to be a massive sell-off. You know, people are going to be holding until it gets that, and they're like, I'll cash out now. It's hit $100,000, and they can't afford a massive retrace because the mining profitability is so poor. It'll probably be the death knell for it. So they're pumping all the shit coins instead. You know, it's nuts. Musk's recent involvement in creating the nascent Department of Government Efficiency, Doge, oh my goodness me, an agency aimed at cutting government spending and streamlining regulations, has further stoked interest. Good grief, what's this? Statement from President Donald J. Trump. I'm pleased to announce that great Elon Musk, working in conjunction with the American patriot Vivek Ramaswamy, will lead the Department of Government Efficiency. Like Doge, oh my God, together these two wonderful Americans will pave the way for my administration to dismantle government bureaucracy, slash excess regulations, cut wasteful expenditures, and restructure federal agencies essential to the Save America movement. This will send shockwaves through the system and anyone involved in government waste, which is a lot of people, stated Mr. Musk. It will become potentially the Manhattan Project of our time. Republican politicians have dreamed about the objectives of Doge, oh my God, for a very long time. To drive this kind of drastic change, the Department of Government Efficiency will provide advice and guidance from outside of government and will partner with the White House and Office of Management and Budget to drive large-scale structural reform and create an entrepreneurial approach to government. Oh my God. So that's why Doge is going up. Jeepers. Since the new agency shares the same acronym with Doge meme coin ticker symbol, some retail investors took this as a sign of a forthcoming Doge rally. Dogecoin outperforms Porsche amid Doge ETP filing. Dogecoin has also benefited from other developments, including the debut of the first Doge-based exchange-traded product, announced by Valor, a subsidiary of DeFi Technologies, on November 26th. And again, the guy who created Doge told everybody not to buy it because he only created it as an effing joke. It's also an inflationary coin. And the majority of Doge is held by the Doge Foundation, because he actually sold out. The owner who created this sold out. He's like, I don't want anything to do with this. This is like beyond me now. It's absolutely massive. He knows it's an absolute piss take. It's an absolute piss take, and now it's just got like a life of its own, brought on by the deep state who have encouraged it. I mean, it's going to be absolutely tragic. The asset manager launched Valor Doge ETP in light of the recent United States presidential election result and the subsequent surge in demand for Dogecoin, bolstered by influential figures like Elon Musk. Joanna Beltz, Flavor's head of Nordics, said in a statement, thanks to the growing interest, Dogecoin's growth helped it surpass Porsche's market capitalization over the past year, rising over 395%, while Porsche's market capitalization fell over 34%. Oh my god. And Porsche's share price has actually got a dividend with it. Doge hasn't. Doge has literally got nothing. Just absolute speculative hype. Porsche was valued at around $117 billion in April 2023, but has since dropped more than 56% to $56.1 billion, according to companies' market cap data. Meanwhile, Dogecoin continues benefiting from Musk's continued X-posts. Good grief. Some crypto traders predict a potential 1,000% Doge rally based on emerging technical chart patterns. Bullshit. Trader Tardigrade, a market pan analyst, mentioned in an X-post that Dogecoin is currently en route to repeat its historical price trajectory based on Gaussian channel. Honestly, yeah. A Gaussian channel is an indicator that allows traders to identify the upper and lower channels of a price action based on the principles of asset distribution. Oh my, honestly, this it's getting dangerous. But again, I mean, we are literally in a fight for the survival of our species, because this lot are going to wipe us all out, and they're going to do that through the control of the financial system. The control of the financial system is everything, which is why there is so much at stake, which is why they're doing this. Pumping all these shitcoins. They do not care. They will do anything to stay in power. That is when I say they, I mean the deep state that is everywhere. Jeepers. Right, the next one. Digital money lag threatens international security. Central banks face mounting pressure to innovate or risk falling behind in the digital currency race, with implications for national security and financial stability. Recently, it was reported that the Bank of England Governor Andrew Bailey announced work is urgently pressing on to create a central bank digital currency for the United Kingdom as a form of digital money accessible to the general public. The announcement is a progress report on a scheme the UK has been considering since early 2023. Bailey's announcement to fast-track activity, however, signals something. There is pressure to be faster and lead the move towards digital currency. What has spurred Bailey's comments resembles a concern shared with regulators worldwide that fintech firms today, intensively driven by innovation and often less regulated across globe markets, are advancing digital solutions faster than central banks. Traditional financial institutions simply cannot match up. This rapid acceleration for private sector solutions threatens the stability, security, and privacy of global financial markets if left unchecked. Good point. As the world of digital money continues to advance, central banks and financial institutions face an imperative to upgrade their technology and to adopt the innovation that has been created in the Web3 ecosystem, applying it in a secure, controlled, and transparent regulatory framework to meet the benchmark of modern fintech innovation. Well, every CBDC has to run on BSV then. It's the only way it can happen. Lagging isn't just a missed opportunity, it introduces vulnerabilities that sophisticated private sector solutions could exploit. Traditional institutions may be unable to uphold the necessary pace of innovation, particularly when pitted against decentralized systems that can provide a high degree of control and transparency, with millions of users contributing to the security and development of this new infrastructure. The challenge for central banks to continue to lead in defining secure, accountable financial frameworks is not easily solved. The competitive edge that Bailey's less regulated tech firms have is that they have achieved more significant innovation by skirting stringent and restrictive regulations. Fintechs are born out of the latest technologies, with adaptive systems integrating Web3 advancements and decentralized infrastructure, whereas central banks and financial institutions work with legacy systems and deeply entrenched practices. The stagnation and slow pace of innovation from traditional financial institutions is not merely technical, it's institutional. The frameworks that govern our economic system, both regulatory and operational, are not designed to keep up with the dynamic evolution of digital currency, because they didn't expect it. They weren't expecting it. They were just like, nobody can commoditize digital data. We're not going to allow anybody to create currency. And every country has their own currency controlled by the central bank. It's never going to happen. They never foresaw this, ever. Regulations have been shaped over decades, focusing on mitigating risk, protecting consumers and preventing financial crises. While crucial, these safeguards inadvertently create barriers to innovation. Society's expectations are, however, quickly shifting as people become more comfortable with digital on-demand services, transparency and ownership of their assets. As the demand for secure digital banking grows, central banks and financial institutions face an unavoidable crossroads. They can either adapt to serve the modern financial consumer or lag behind other countries and institutions that are fast moving in this direction. Unfortunately, the traditional frameworks are, at times, so constrained by regulatory caution that they become an obstacle rather than a productive measure. Some might say it's realigning perspectives, fearing the innovators disrupting today's financial system will only widen the chasm between traditional finance and the challengers. Learning why the disruption is taking place and who is leading innovation could help inform regulatory developments and guide innovation for the central banks. The solutions for such banks are simple but require much trust. We're talking about new policies, partnerships and talents, pipelines embedded at a traditional institution level that can effectively navigate the radically different world of blockchain finance. Linking arms with the challenges you're seeking to catch up to does come with its risks. Finding suitable partners in fintech companies that offer the security, the crypto asset services and the blockchain interoperability is a lengthy process requiring comprehensive trials. Perhaps the model of digital currency governance itself must be rethought to enable security-driven innovations that are compliant but flexible and able to respond to global demands for speed and transparency. In the wake of its competitors, the opportunity for central banks lies in redefining what it means to secure a digital currency with an openness to embrace international cooperation to ensure a uniform standard, privacy, security and accessibility. Or uniform standard of privacy, security and accessibility. Again, the only network it can run on is the genuine Bitcoin, which is BSV. No other network can do this. Central banks face a paradox. While protecting consumers from the risk, they also must move forward. Beyond the chance that tech-driven challenges will outpace them lies a wealth of opportunity. It's no secret that the CBDCs unlock greater financial inclusivity. There are critical considerations as to how these digital currencies can better control inflation, interest rate transmission, and fiscal policy coordination. Such a possibility seems argument enough to be more proactive in advancing CBDC progress worldwide, making hesitation seem all the more costly. Oh, that was a great article, Alan. Really enjoyed that. Alright, let's go on to this shit show then. Kraken winds down NFT marketplace, no surprise there. Starting November 27th, Kraken's NFT marketplace will transition to a withdrawal-only mode. Crypto exchange Kraken is shutting down its non-fungible token marketplace just over a year after its launch, because it was a piece of shit. According to an email sent to clients and seen by Cointelegraph, the NFT marketplace will transition to a withdrawal-only mode on November 27th, initiating a 3-month withdrawal period before its complete closure. Kraken said the move will redirect sources to new products and services. Again, so all NFTs are literally going to be wiped out of value because the only reason people are buying them is to speculate on them, which means dumping them. And when the marketplace goes, their value goes to zero. No one's going to have it. A spokesperson for Kraken commented on the platform's discontinuation in a statement. We've made the decision to close our NFT marketplace so we can shift more resources into new products and services, including unannounced initiatives in development. Clients have been informed of the changes and our team will support them as they move their NFTs to their Kraken wallet or a self-custodial wallet of choice. Yeah, like they're going to move their NFT pics onto the phone so they can just show it to their friends. Nobody gives them monkeys anymore. Literally. Bored Ape Yacht Club and all that crap. The exchange fully rolled out the marketplace in June 2023 following a few months of beta testing. At its debut, Kraken featured over 250 NFT collections without charging gas fees from buyers or sellers on transactions. That's because a lot of them were just simply held on hard drives and not actually even on the Ethereum network. Kraken's decisions come as the NFT markets sees a downward trajectory in 2024. According to an industry report by DAP Radar, NFT trading volume reached a yearly low of $471 million in August, a 16% decline from July. NFT trading activity reached $3.9 billion in the first quarter of 2024 from $12.6 billion during the same period of 2022. That is insane. Along with the market slump, Kraken's platform also faced competition from niche marketplaces such as OpenSea and Blur. In August, trading volume on OpenSea closed at 110.5 million, representing 27% decrease from the previous month. While the market recovered in November, it still lags behind its peak of 2022. I mean, the market for this shit is just absolutely phenomenal. Phenomenal. I mean, I guess people are just using their investment profits from all these shitcoins to buy these NFTs, thinking that it's going to be the next thing to speculate on. They have no idea what Bitcoin really is, you know. And all this is a distraction away from Bitcoin. That's all it is. I would say a marketplace probably created by the CIA. Call me a conspiracy theorist, call me cynical, but there we go. Another negative development in the NFT sector came in late August when the Securities and Exchange Commission sent a Wells notice to OpenSea suggesting an upcoming enforcement action around collectible tokens. Yeah, because those tokens were actually issued on centrally controlled blockchains, so they're securities. You can't own an NFT token if it's on a platform that is owned and controlled by a central authority. The only way you can actually own an NFT token is if the token exists on a platform that doesn't have any central point of authority or control. And the only platform that is BSV, the genuine Bitcoin, with the protocol remaining unchanged going right back to the Genesis block. That is it. Kraken itself has been previously targeted by the agency. The company is currently in a legal battle over whether crypto tokens added to their crypto tokens traded and sold on their platform were investment contracts under the Howey test and subject to securities laws. Well, I've just explained that they are. It's unclear whether the shutdown of the NFT marketplace is related to the potential further legal issues with the US regulators, as such tokens still lack clear guidance or guidelines. Well, if they listen to me, I would explain it. You've got the Howey test, and then you've got the Toshi test to test for a digital commodity. Yeah, that's it, really. Oh, I quite enjoyed those articles. Right, so now we're on BSV blockchain. Let's have a look at this first article: building transactions on BSV blockchain with the Python SDK. That's a software developer kit. So I need to learn to build and create and all that. The Python SDK was recently released, offering Python developers the opportunity to integrate the versatile features of the BSV blockchain onto their applications without switching languages, to enhance accessibility and competitiveness in AI use cases. Get access to the Python SDK for BSV on GitHub. Introducing BSV blockchain beginners to developing with Python. Oh, excellent. This is what I need. Arthur Gordon, senior software engineer at nChain, has launched a beginner's guide on BSV blockchain development on Medium. The first post in the series is about how developers can build blockchain transactions. Oh, fantastic. Transactions are a fundamental action on the blockchain and record how data can be transferred, validated and further utilized. They therefore form the cornerstone of applications that want to utilize the utility of a scalable blockchain such as the BSV blockchain. This hands-on approach helps users gain practical experience with blockchain concepts such as transaction scripts, fees, and validation. Gordon highlights the simplicity and flexibility of the BSV testnet for learning blockchain development, providing a foundation for more advanced applications in future explorations. Introduction to blockchain transactions with Python. Gordon's article provides a practical guide to creating broadcasting blockchain transactions on the BSV testnet using Python. The process begins by generating a wallet key pair using the transaction engine library, which creates a private and public key. The private key must be kept secure as it is used to sign transactions, while the public key allows others to send funds to the wallet. Funding a wallet on BSV testnet. To fund the wallet, a testnet faucet can be used to transfer funds. A small transaction fee determined by the size of the transaction is deducted from the input amount to process the transaction. Once the wallet is funded, the next step is to build the transaction. This involves specifying inputs, the source of the funds, and outputs, where the funds will go, using helper functions provided by the Exchange Engine library. Outputs can include payments to other addresses or sending the remaining funds back to the wallet minus fees. Signing and broadcasting, the transaction is then signed using the private key, which proves ownership of the funds being spent. To complete this step, funding transaction details are retrieved using the on-chain API. After signing, the transaction is ready to be broadcast. The signed transaction is submitted to the BSV testnet via the What's on Chain API, and the transaction ID, can be used to track its status on the network. So that's awesome. The signed transaction is submitted to the BSV testnet via the What's on Chain. Oh no, where is it? So yeah, after signing, the transaction is ready to be broadcast. Again, that's what's really important. After signing, like, it needs to have a digital signature on it, and this is what BTC doesn't have. So the transactions on BTC are not ready to be broadcast because it's the signature that authorizes it and validates it. Without a signature, nobody has a claim on it, and it therefore has no contractual credibility and therefore no economic value. It's as simple as that, and these BTCs have no idea. If you would like to read more about the blockchain development of beginners, you can follow Gordon on Medium for his ongoing beginner guides. If you're interested in a more comprehensive and detailed overview of recently released Python SDK, you can watch the Python Code Along session hosted by Brett Banafy, head of the community at BSV Blockchain here. Oh, nice. Excellent. I think I'll do that. Let's have a look at this then. So SPV Wallet, instant transaction finality through peer-to-peer verification. In the rapidly evolving world of blockchain technology, speed, efficiency, and scalability are paramount. SPV Wallet emerges as a cutting-edge solution offering virtually instant transaction finality, verified directly between peers. By utilizing the simplified payment verification mechanism, SPV Wallet ensures that transactions are verified using Merkle proofs, reducing the need for heavily computational processes like typically associated with blockchain networks. Peer-to-peer verification with Merkle proofs. Traditional blockchain wallets often rely on globally listening to the mining node network and filtering transactions by address, which can be resource intensive and slow. In contrast, SPV Wallet operates through direct peer-to-peer transaction verification. When a transaction is crafted, it is accompanied by the necessary Merkle path values, allowing participants to verify that the transaction input exists in valid blocks by using Merkle proofs against the relevant block headers. Merkle paths enable users to confirm that the inputs are unspent outputs included in prior valid blocks, ensuring the authenticity of the transaction. To perform this verification, a lightweight client infrastructure is needed to acquire block headers. This can be facilitated by any block header service, such as public services like What's on Chain or private block header services. This approach eliminates the need for users to run full nodes or rely on centralized intermediaries, enabling efficient and secure transaction verification. Scalability and minimal data retrieval. One of the core advantages of SPV Wallet is its ability to scale efficiently without concern for network congestion, a non-issue on the BSV blockchain. Since SPV Wallet operates independently of network-wide conditions, it can handle high transaction volumes without being affected by potential bottlenecks. The design of SPV allows users to validate transactions without imposing additional load on transaction processors, which helps avoid unnecessary congestion. By structuring transactions to minimize data retrieval operations and avoiding unnecessary load on node operations, SPV Wallet enhances scalability. Transactions can be validated without requiring a UTXO lookup, contributing to fewer resources being required for transaction validation. This efficiency ensures that transaction processing servers can handle high volumes effectively, maintaining performance even as the number of transactions grows. Consistent fees with and efficient validation. In many blockchain networks, transaction fees can fluctuate with network demand, leading to unpredictability and higher costs during periods of congestion. On the BSV blockchain, fee stability is achieved through unbounded block size, allowing for consistent fees even as transaction volume increases. While SPV Wallet's peer-to-peer validation enables users to validate transactions quickly without deferring to the node network, it does not directly affect the fees, as transaction validation is still conducted within the node network as well as peer-to-peer. The advantage lies in the speed of validation from the user's perspective, enhancing the overall efficiency of the transaction process. Comparative analysis with other fast blockchains. When comparing the BSV blockchain to other blockchains known for their quick transactions, it's important to consider the different approaches each takes to achieving scalability and transaction finality. Some blockchains implement consensus algorithms and cryptographic techniques to reduce transaction times and achieve rapid finality within their blockchain consensus mechanisms. In contrast, BSV focuses on scalability through unbounded block size and the use of simplified payment verification for efficient transaction verification at the user level. SPV is a technique for users of the blockchain, allowing them to verify transactions without the need to process the entire blockchain or rely on the consensus algorithm. This differs from consensus level optimizations in other blockchains, which are integrated into the Bitcoin's core protocol. Additionally, in the BSV ecosystem, technologies like Terranode aim to enhance transaction processing capabilities, achieving transaction finality within approximately 80 milliseconds through the first seen rule and proof of work mechanisms. Practical use cases for SPV Wallet. SPV Wallet's instant transaction finality, lightweight verification, and scalability make it ideal for industries where transaction speed and efficiency are crucial. High-volume micropayment systems, online gambling platforms, and secure digital advertising networks can greatly benefit from the ability to process transactions quickly, with minimal overhead and low fees. By crafting transactions with the necessary Merkle path data for verification, SPV Wallet enables efficient real-time peer-to-peer validation, empowering businesses and individuals to transact without the need for complex infrastructure or third-party intermediaries. Conclusion, SPV Wallet represents a significant advancement in blockchain technology, offering a practical solution for instant transaction finality and efficient peer-to-peer verification. By leveraging SPV and Merkle proofs, it addresses key challenges in scalability and efficiency, providing a robust platform for high-frequency transactions. As the blockchain landscape continues to evolve, solutions like SPV Wallet play a crucial role in enabling widespread adoption and unlocking the full potential of decentralized technologies. Oh, awesome. Learn more about BSV blockchain and SPV Wallet. Oh, fantastic. That was a great article there. Well, we've run over a bit of time. 31 minutes. Tell you what I might do. I might leave that there and just do another chart show if anybody's interested in that. So we'll do that instead. So as ever, if you enjoy these updates, please ding your donations for your appreciation to either Satoshi at Sembi.com, Handcash.io, Simply.cash, Relasia.com, Rockwallet.me or Senti.ch. We'll leave it there. I hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.